Product Part 1. The question in number 1 was, prior to operation, Pinky White invested the following assets to the business: cash 100,000, furniture set 50,000, delivery vehicle 50,000. In analyzing business transaction to expand accounting equations, in my answer sheet, I put cash on the accounting title under assets, which are the effects are 100,000. The furniture and fixtures under assets and the effects are 50,000. And the delivery equipment under assets is 50,000. I put it into asset because it is an asset. It is under the in assets of the business. And also, Pinky White is investing, so which means it is an owner's equity, so increases her value or her money, so plus 200,000. Now on September 2, the transaction was purchase supplies from AME Educational Supplies for 4,000 on cash basis. So from the word cash, I put it under the assets, cash negative 4,000, and the expenses in under expense, I put supplies expense increasing, so like plus 4,000. Now at September 3, hired riders, bookkeepers, and rank file employees, all hired personnel, receive proper training. This is not a transaction, so I put nothing on the box. Now, September 5, Pinky availed a 250,000 one-year loan with a 10% interest per annum in Oro Bank. So I put cash under the assets, and the effects are increasing 250,000 pesos, and I put loans payable under liabilities and the effects are 275,000 pesos. Why did I put 275,000 pesos? Remember, in the September 5, the owner availed a 250,000 loan with a 10% interest per annum. So which means there is a 10% increase. That's why 10% of 250,000 is 25,000. So I put 25,000. I added 25,000. Now, September 6. Paid business registration fees to necessary government agencies. I put cash under assets, negative 10,000 pesos, and accounting, and I put under expenses are taxes and licenses, plus 10,000 pesos. Now, September 8, the transaction was the business earned 60,000 income for delivery service and 20,000 which is covered with a promissory note, and the rest is cash. You just minus 20,000 from 60, which is 40,000. So I put cash under the assets, and increasing, it is increasing, so it's plus 40,000. And I put Under revenues, delivery incomes plus 60,000. And remember, the 20,000 pesos are was given like a promissory note. So I put notes receivable, and it is increasing, so plus 20,000. On September 10, the business purchase following two delivery vehicles. The two delivery vehicles fair market value of 72,000 each, purchased for 50,000, which means the two vehicles were 50,000 pesos each. And four sets of office equipment purchased for 60,000 in total, covered with a 90-day promissory note. So in September 10, I put delivery equipment under assets, so plus 100,000, and under liabilities, I put notes payable 160,000, and office equipment plus 60,000 because it's increasing. In September 11, the business paid for under assets. I put cash, and the effects are negative 11,000 pesos. And under expenses, I put repair and maintenance is 1,000, and fuel and lubricants 10,000. In September 12, the business earned 150,000 income for delivery services. So under I put cash under assets, which is 150,000. It is increasing. Then in revenues, I put delivery income 150,000. On September 14, it is account receivable, which is 60,000, and in delivery income is 60,000. September 15 was paid semi monthly salaries, which is half of the salaries. So cash under assets. When I calculated the total amount of payment monthly by the owner to to the employees, it was 120,000. So if the owner paid half, so the half of 120,000 is 60. That's why it's minus 60,000, and the salaries and expense is plus 60,000. On September 22, the business signed a contract with a major food chain store to become its courier. Delivery goods would begin the following day. This is not a transaction, so I did not put anything. On September 25, business paid 14,000 for the rent of the office per month. So I put cash under assets minus 14,000, and rent expense increasing plus 14,000. On September 28th, there are three transactions. First, the owner withdraws 20,000, so I put cash is plus 20,000, and owner's equity, I I P white I mean pinky white draw, so pinky white draws 20,000. Now the second transaction is she pays the 50 uh the month the the salaries, which is 60,000, and the salary expense is plus 60,000, and cash under assets, which is negative 5,000, so and plus utilities expense 5,000. Lastly, the office equipments are uh, under assets, so I put plus 30,000. Accounts payable is 30,000. The total of effects in the total is 1,114,000. That is part 1. This is part 2. Theory. We are recognizing and differentiating debit and credit transactions. The elements are assets, liabilities, owner's equity, revenues, and expenses. If assets are increasing, we will put it under debit. If assets are decreasing, we will put it under credit. Next, liabilities. If liabilities are decreasing, put it under debit. If liabilities are increasing, put it under credit. Owner's equity. If owner's equity decreasing, put it under debit. If owner's equity increase, put it under credit. Revenues. If revenues are decrease, put it under debit. If revenues increase, put it put it under credit. Expenses. If expenses increase, put it under debit. If expenses decrease, put it under credit. Let's go to my answers. On September 1, there are three transactions, which are cash, because it is increasing, so I put it under debit. Amount was 100,000. And Pinky White capital, because she invested 200,000. Next is furnitures and fixtures. It was increasing. It was under assets, so it means it was increasing. So I put it under debit. And the amount was 50,000. Delivery equipment. Still, it was increasing and it was under assets, so I put it on debit, under debit. September 2. Supplies expense. And the business paid cash for it, means when cash is decreasing, you will put it under credit. And if expense are increasing, you will put it under debit. So I put supplies expense under debit, and the amount was 4,000. And cash, the amount was 4,000 under credit. In September 3, there was no transaction because it was hiring of all employees. In September 5, uh, PQI availed 1 year loan with a 10% per annum from Oro Bank. So it was cash, and cash was increasing, so I put it under debit, and the amount was 250,000. And I put loans payable to credit because it was under liabilities. So if liabilities are increasing, put it under credit. In September 6, Paid businesses registration fees to necessary government agencies. The paid amount was 10,000. And if you pay, that is decreasing of cash. So I put cash on credit. The amount was 10,000. And tax and expenses were increasing. I put it under debit. And the amount was also 10,000. On September 8th, the business earned income from delivery service, 20,000 of which is covered with a promissory note. So, first I put it on cash, which is 40,000, and the delivery income into credit because the delivery in because revenues were increasing, so it means it is on credit. And I put notes payable, I notes receivable under debit because it was under assets and the amount was 20,000. On September 10, purchased the following: two delivery vehicles for 50,000 each and four sets of equipment purchased for 60,000 in total. The delivery equipment were increasing assets, so I put it under debit. The amount was 100,000. And office equipment was 60,000. It was increasing assets, so it under I put it under debit. For the amount of the delivery equipment was 100,000. The office equipment was 60,000. It was notes payable because uh in total it was covered with a 90-day promissory note. So it is under the credit because it was a liability. The amount was 160,000. In September 11, there were repairs and buying of fuel. So these were the repair, maintenance, and fuel lubricants were expense. So I put it under debit because if expense are increasing, it is under debit. And I put cash on credit because if cash decrease, it is under credit. On September 12, the business earned 150,000 income in delivery services in September 12. So it was cash. So it was in an increasing asset. So I put it under debit and the amount was 150,000. And if revenues are increasing, it is under credit because delivery income is a revenue. So 150,000, the amount was 150,000. In September 14, rendered delivery service on account 60,000. So I put accounts receivable 60,000 because it is under assets, and if assets are increasing, it is under debit. Next is delivery income. Delivery income is a revenue under revenue. So if revenue is increasing, it is under credit. In September 15, paid semi salaries of workers. When I added when I added uh the salaries of all the workers monthly, uh it was 120,000, but the workers are paid every 15 days. So half of 100 a half in a month there's 30 days, so they are paid every half of the month, so which is 15 days. So the half of 120,000 is 60,000. And if and it is a salary expense, so it is an expense. If expense are increasing, then it is under debit, and if cash is decreasing, then is under credit. In September 25, business paid 14,000 for rent of office space. So paid means it is cash. So the rent expense is under expense. So if expense is increasing, then it will be under debit, and if cash is decreasing, it will be under credit. And uh, September 28th, there were three transactions. The owner withdrew 20,000 cash, which means it is cash is an increasing assets is an asset, so put it under 20 put it under debit. And salary expense is an expense, and if expense are increasing, then it will under be debit. And utility is expense, and it is an expense. If expense is increasing, it is under debit. Now cash is if cash is decreasing, it is under credit. Cash was decreasing in both times. Lastly, office equipment. And office equipment is under assets, which is increasing. So I put it under debit. Amount was 30,000. And it was paid on account. So it's account payable. So it's 30,000.